Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for October 26, 2007. Well, Friday came to a close today, and a long week of active trading because of these markets have just been unbelievable of lately finally came to a close today. And at 4 p.m. I can tell you honestly that I'm ready to collapse, take a nap, and get ready for a nice relaxing weekend after this type of week in the markets. Now, it doesn't mean it was a bad week. In fact, it was a phenomenal week. You couldn't ask for anything better as a trader. There was volatility, there were swings, there were, earnings reactions. Baidu was down to 305 yesterday after hours, and it went to almost 360 today. It was just a great trading week, and again, in the day trading chat room, what a week. Again today, I expected Friday, especially the afternoon, to be slow, and in fact, it was phenomenal trading. Chinese stocks started to run again, CHNR, STV, EFUT. Early this morning, we caught CTEL, a Hong Kong stock, a telecom stock, and it was just an overall great day in trading. And the markets rallied, and you can see the NASDAQ here. And again, we knew we were going to gap up because yesterday Microsoft came out with solid earnings. And even though Baidu after hours was down yesterday, the futures were still pointing up as we talked about in yesterday's video. And up we went today. The market's gapping up today. The NASDAQ gapped up 50 plus points. And we did sell off during the day, there's no doubt about it. But all in all, it was a solid positive day. And the Dow ended up 135 points. The NASDAQ ended up 53 in the third points, or 2%. And the S&P ended up 21 points, or 1.38%. So again, when the market's rallying right now, we're seeing the Dow lag with the S&P. However, when the market's falling, we're also seeing the S&P and the Dow get hit less. So really the NASDAQ both ways is more volatile. On the downside, it's getting crushed, like the other day when it was down 75 points. And today we saw the NASDAQ leading up 2%, or up 53 points. What a day overall. Anyways, let's get into some technical analysis here and talk a little bit about charts and angles and all this fun stuff. What you guys can see here is the NASDAQ daily. And I'm going to go over the intraday first, and then we'll branch out. And let me get my trend tool out. And overall, what you're going to see here is a gap up. Now, this gap up is key because we never really get back there. And that's interesting to note. We never even made a double top, though we did attempt to. And you can see right off the opening we sold. And then we got a little bounce and we sold some more. And where did that market come down to? Right to the 20 moving average. In fact, it got a little bit below, but look at this pattern here. Notice the little tail here and the close in the upper areas of that. That's a reversal bar. And yes, you like to see a longer tail. Usually you want to see a tail in the range of, a little longer. Not necessarily that long, but longer. And it close up there. But that'll be what we have to deal with today in the NASDAQ. And then basically off that tail, we started to rally. And the key here was once you closed above the 20 moving average here, it was basically up and away. And you had small little pullbacks here, but you never got below that 20 moving average the rest of the day. So there's our solid support line. So again, the NASDAQ kept this support line right here, as you can see, and the 20 moving average was basically below it the whole rest of the day. We saw another sell-off down to the 20 again to test that support. It held phenomenally, and we closed near the highs of the afternoon session. In fact, a little mini double top right here was put in. Now, at ES, let's look at the ES intraday. The ES intraday is a little different here because originally the markets were slightly different here. The ES was not up as much. In fact, you see here around 8 o'clock, this is when the rally began. And right here at 9:30 is where we opened. And the ES was up substantially, but not in comparison to where it ended. And this is quite interesting. We saw the ES, the S&P futures, gain momentum throughout the afternoon and close at their highs of the day, even higher than the opening, while the NASDAQ actually closed lower than the opening. So again, you can see the push up here. Here's where the market opens right at 9:30, and then we sold again just like the NASDAQ did. However, our baseline for support here was the 50 moving average instead of the 20. And again, we pushed back up. We got above that 20, and then the 20 again, just like the NASDAQ, was the main support line for the rest of the day. And you can see we hit it a couple times, but we never closed below that in a candle. And one of the things you guys should all be aware of, and I know the chat room people are that have been in our chat room, is that you have to wait for closes of candles. You can't jump the gun because many times they'll make it look like it's going to close below, only to rally it in the last 30 seconds of a candle on the 10-minute. And again, we use the 10-minute intraday for charting, and that's what we base it on. So as long as you don't close below here, you haven't broken down, and that's what we did. And again, you saw a rally up here, then a pullback, touches that 20 again, never even goes below, rallies into the close, and closes at the high. The ES futures closing up 17.5 points today. Phenomenal day. The one thing I'd like to point out here, volume a little on the light side, a little on the lighter side. It wasn't light, but it was lighter than our down days, and I want to show you here. All right, here's 2 days ago we had a very volatile session. Here's where we had a big fall, and look at today's volume. So again, it's a solid rally. You can't dispute that, and you have to go here with the near-term trend. The only thing we pointed out yesterday was that the next point of resistance was coming up here, and that's that 20 moving average. As we're going to watch for a hit of this 20 moving average, I do think that Monday we gap up. And this is just me guessing here. Again, I have no validity. You guys should always be consulting, your financial advisors before making any decisions. But, in my opinion, and it's only an opinion here, I do think that China or Asia will be up dramatically based on the U.S. markets today, Sunday night, our Sunday night on the East Coast, and that should lead to a positive open, continued momentum, and it's very possible we open right around that 20 moving average. Now the key to be watched for now is, do we get above that 20 moving average or do we stay below it as of the close on Monday? And we'll watch that very, very closely to see what happens. Okay? And again, to watch that. On the downside, what everyone should be watching now is this. You can even do it like this. I would dare say you can watch for a close below here. Really, a close below the 50 is what you're looking for. Notice how no candle since this candle right here has closed below the 50, and they rescued that the first day after, and it closed above there. And since then, we've had dips below, but no candle has closed. And this is the daily chart we're looking at. No candle has closed below the 50 moving average. So what I'm going to be watching for here is a close below that 50 moving average. First close below, we look for downside. Close above the 20, we look for more upside. So we're right in here, and you can really look at right here as being a little bit of a triangle formation here. And as you can see, we're going to eventually come to a point where we're going to have to go one way or the other. And it's going to, interestingly enough here, folks, it's going to coincide with the Fed meeting probably on Wednesday. That's what it's going to come down to. And I want to just point something out here. We all know that the Fed is releasing their rate decision on Wednesday, and it's looking like a 25 basis point cut is what's in the works. That's what the market has factored in. Now, if the market has factored that in, that's why the dollar is where it is. Remember, the market always factors something in. Should they cut less or more, then the dollar will react appropriately. But right now the market has factored that in, meaning all prices in this market are in relation to what the Fed does, if it's a 25 basis point cut. Now, should they say something like, we're worried about inflation or this or that, and it makes it look like future cuts are out of the works, then we obviously have issues with the dollar. Probably will strengthen, commodities will fall. And this is where it gets very fishy, because oil was up another $1 and change today, up to around $92 a barrel, slightly below. Oil's not that far from 100. We have one more solid week of rallies like we did this week, and we're hitting 100. Where's the point where the market gets worried? Where's the point where the market says, this is horrible because consumers are going to get crushed? Inflation's going to increase because everything's made with oil that we use, whether plastics, rubber, in our tanks of gas, in our cars, to the combines used on the fields to do different things for wheat and so forth. And if all this is factored in with oil, and oil is approaching $100, when is that going to get passed to the consumer? Most of us know already that food and energy prices have increased dramatically. Food has, obviously, and so has energy. The question is, when does it go into other things? When does it start to affect the consumer more? Because we're already seeing a lot of these retailers get hit because consumers have stopped spending. And the question is, there is going to be a tipping point, and we have to be aware of that. And you just don't want to follow blindly on an upward motion here. And yes, we are continuing to move up. As we can see, the trend here is continuing to move higher. But all in all, there has to be a point here where we say, what's going on? And I'm afraid that that point could come soon. And I do really want to be cautious for myself. And again, I just speak from my perspective of what I'm doing, not what anyone else should do, obviously. But I am very cautious here. I'm a little worried about this market. This pattern notoriously is a breakdown pattern. Whenever you have an angle like this after a drop, usually you see another fall. But again, until we close below that 50 moving average, I personally won't be short the market. And again, that's just me being cautious. I've learned through over the years of trading that you can't jump the gun. You jump the gun, you get hammered. So again, I will be waiting, but should that go down a little more there and close below the 50, I'll go short. On the long side, even if we close above here, I'll have a hard time going long. I'll be honest with you guys. Technically, yes, a close above would be bullish. But on a normal kind of decision-making pattern, I can't justify going long this market with oil nearing 100, with the credit bubble bursting, with the housing prices continuing to fall. It's just a little too much to risk. In any case, just pointing out, that's enough of this market stuff. We know what to watch for Monday. You watch that 20 moving average and you watch the 50. We're watching for a close below the 50 or a close above the 20, and we'll go from there. In addition, just to point out a couple moves here, CTEL, we were in it at right here. And boom, look at that move up, day trading. This is all day trading, folks, and I strongly encourage everyone to come join the room just to learn. If you don't even want to day trade, just to sit there and listen to our discussions, listen to the questions people point out. It's the best learning environment, I feel, on the internet, and it's only $199 a month. You can't beat that. It's like a seminar for 8 hours a day for $199 for a whole month. In any case, folks, that's what we played. We played multiple other stocks that made moves like this. I won't go into them. Have a wonderful weekend. Get some rest. We'll see you Monday. Take care.